Welcome back to our series of tutorials for the Pro Edition of RealData's Real Estate Investment Analysis. In previous videos, we looked at the General Info worksheet and at the Residential and Commercial Income modules. Let's continue, and in this session, we'll focus on the APOD, the Annual Property Operating Data. This is a key step in our evaluation of an income property because it's where we'll end up with our projections about that property's current and future net operating income. Okay, let's begin by going to the bottom row of tabs and clicking on the APOD. That takes us to the APOD worksheet. The top section of that sheet, about 60 rows, is all about the assumptions. The first part of that displays details about the property's income, or revenue if you will, and most of that information is actually imported for us automatically from the residential and commercial modules, the same two modules we saw in the previous videos. You'll see that above the income amounts we have some radio buttons. These let us specify whether we want to import the gross scheduled income from the residential worksheet, the commercial, or from both. Now that can help us streamline our presentation so that we're just displaying what we want. Notice too that we have a fourth radio button called Override. So if we didn't want to use the data from the residential or the commercial sheets, we could just choose Override and enter our gross scheduled income here directly. But since we did use those two income modules, residential and commercial, we'll click on the button for both so that we can see how those numbers are presented. The commercial revenue is broken out so that it shows base rent, expense recoveries, other revenue and concessions, and abatements and rollover vacancy. And, of course, it shows the total commercial income combining those four lines. Next, it shows the total residential income. And finally, the combined income from the residential and commercial units. This income section of the APOD provides two lines for miscellaneous income, things that might not be part of the regular rent. And their names can be edited to whatever we like. I've chosen, by way of an example, to type in the name parking income in one of the lines and to enter a dollar amount of $1,000 for the first year. Another common miscellaneous item might be revenue for coin-op laundry machines. Our next data entry is for the vacancy and credit allowance. We'll usually want to enter this as a percentage of the gross scheduled income, so an entry of less than 1, signifying a percentage, will be what we want to use here. I've entered 0.03, indicating 3%. The next section is where we'll enter our assumptions about operating expenses. The items listed here are pretty much the likely candidates for expenses we may actually have. But notice that all of the names are in blue, so that we can change them to say whatever we want. For example, you may not need a row for licenses, so you could call it something else. We'll usually enter the first year expense as a dollar amount, then for future years specify a percentage increase, or alternatively, a new dollar amount. However, there are two rows in this list that behave a bit differently. One of these is property management. It's quite common for owners to estimate their property management costs as a percentage of the gross operating income. In other words, we estimate that we're going to pay a percentage of the rent actually collected. So again, if we enter a number less than 1, as we have here, 0.04, signifying 4%, then the software will multiply that by the gross operating income in order to estimate the amount we expect to spend on management. Another line item that could behave differently from the others is repairs and maintenance. If we click the Options button, we'll see that we have the choice of calculating this item in much the same way as most of the other expenses, as a fixed dollar amount specified for the first year, followed by percentage increases for subsequent years. Or we can choose to have it calculated instead as a percentage of total gross income. From our experience, it seems that most folks go with the fixed dollar and the percent increase, but the choice is yours. The APOD sheet has a convenience that is similar to one that we saw on the residential income sheet. We can enter a percentage here and then click on the increase button. So with one click, that'll enter a uniform rate of increase for all expenses except property management. When we click on the button, we'll see this pop-up. As the pop-up says, we can overwrite anything that the button has posted for us. For example, we might want to change our advertising expense to $1,000 in year 3, and then start a 4% annual increase after that. Okay, we have one more important feature to check out here, and that's how we can handle pass-through expenses, aka expense reimbursements or recoverable expenses. It's really easy. Start by clicking the Passthroughs button. That'll skip us over to the right side of the APOD worksheet, where we see this. We simply click to put a check mark next to the expense that we want to pass through to the tenants. If there is a base amount that the landlord will pay, a so-called expense stop, where the tenants pay their pro rata share of the amount over that base, we can enter the base here. In this case, the landlord is paying the first $8,000 of property tax expense, and the tenants are going to be charged their pro rata share of the balance. That charge will show up on the commercial income worksheet in each of the individual tenant lease blocks. Just a side note, the commercial sheet will calculate each tenant's percentage based on that tenant's share of the commercial space, but we can easily edit that percentage there to suit our circumstances. When we're done, a click on the Home button skips us back to the far left where we came from. Well, that takes care of all of our data entry. Now to see the results, we simply scroll down. We'll find that the program has fashioned the output into 3 distinct views. The first is what we'd probably expect, and that's to express our results in dollars per year. And perhaps most important is what I mentioned at the very beginning of this video. The chief purpose of this APOD is to get us to a projection of the net operating income. That is, the gross operating income, less all of the expected operating expenses. And that's what we've got as we scroll down to our bottom line. But experience has taught us that some investors also like to be able to display the results in dollars per square foot, or in dollars per unit. So, scrolling down further, we'll find the APOD report expressed in those terms as well. And finally, when we use the program's special Real Data menu, we'll see that we can choose to print any or all of those variations, as well as a printout of the assumptions. We can also choose to print any number of years of data, so no need to tinker with Excel to make things fit on the page. Well, that wraps up our look at the Annual Property Operating Data module. I hope this was helpful, and I hope you'll join me next time as we continue our series of tutorials on how to use the Pro edition of RealData's Real Estate Investment Analysis.